Let's start off with a quote. When you change the way you look at things, the things you look at change. In this video, I'm going to share how I treat CPF top-ups as one of my investment strategies and why I think it's the low-hanging fruit to take advantage of as early as possible. To those new to my channel, I create videos that explain and simplify CPF policies and concepts through illustration and examples. I also share CPF tips and my strategy to grow my wealth using CPF. Visit my channel, like, subscribe, and share my channel with your friends if you find my content useful. In any stocks investment strategy, you need to answer these 4 questions. 1. What to buy? 2. When to buy? 3. How much to buy? And 4. When to sell? A solid investment plan means that you are clear and consistent on your buying criteria, for example, what and when to buy, how much funds to allocate to manage your portfolio risk, and finally knowing when to exit, for example, to cut loss or take profit. To be clear, I'm talking about topping up CPF to maximize special account SA to full retirement sum FRS and Medisave account to basic healthcare sum. If you'd like to learn more about this strategy, feel free to watch the video above. I'm not referring to investing your SA, which you can, but I will not recommend. Please remember everything I share is just my personal opinion and not financial advice. Let's start with the first criteria, what to buy. This is one of the toughest questions to answer. What stocks to buy? How do we select a stock? What are the criteria such as financial matrix to look out for? On the other hand, for CPF, I don't have to pick or research on any stocks. I just think of CPF as my fund manager doing the investment for me. One big problem solved. Next, when to buy. Depending on your investing style, those focusing on fundamental analysis (FA) will buy when a stock is undervalued or below its intrinsic value, while those who prefer technical analysis (TA) will focus on chart patterns to decide when to buy. Whether you're using FA or TA, there is considerable effort to do analysis and time invested to monitor the markets for buy signals. For CPF, I don't have to worry about timing my entry. This removes a lot of emotional stress. For me, the time to enter, for example topping up CPF, is simply as early as possible. To understand the real power of compounding, watch the video above. After we've figured what and when to buy, now we need to decide how much to buy. In investing, this is called position sizing. The whole idea is to size your trades to manage your portfolio risk considering the potential gains. The risk-reward ratio of every trade must be favorable to ensure you are not taking excessive risk for minimum returns. With topping up to CPF as a strategy, because there is minimal risk in my opinion, which I've shared my rationale in the above video, and a very high probability of 4% gains per annum, I don't really have to worry about how much to buy, and in fact there's a max limit that I can top up to, which is determined by the prevailing FRS and BHS, which is 192k and 66k respectively in 2022. Finally, in any investment strategy, you need to know when to sell. This is your exit plan. It can be the trigger point to cut loss or take profit. You may have experienced stock prices continue to rise after you sold a stock, or prices continue to fall when you decide not to cut loss and hold on to a stock. In other words, the timing of when to sell can impact on your overall profitability. However, with CPF, I do not have to worry about timing. CPF has a well-defined exit plan, which is anything above FRS full retirement sum at 55 can be withdrawn, and CPF life payouts start from 65 based on existing policy. To sum up, for me, I see the strategy of topping up CPF to hit FRS and BHS in SA and MA as an investment plan which aims to give me 4% returns over an extended period of 20 to 30 years time frame depending on when you start. It's straightforward and easy to implement as there's very little ambiguity in deciding what to buy, when to buy, how much to buy, and when to sell. That said, as a reminder, low risk doesn't mean no risk. Like any investments, including CPF top-ups comes with risk. At the end of the day, you have to decide if the risk commensurate with the potential reward. Since investing in stocks require much more effort and skill, should we not invest in stocks altogether? No, don't get me wrong. Investing in stocks can be very profitable and it's also a part of my overall portfolio. However, I find CPF Top-up a low-hanging fruit because of its simplicity and execution as I've explained. Hence, topping up CPF was my first priority to take advantage of compounding as early as possible. This is similar to how I'm taught to tackle the easy test questions first, since those are the ones we are most confident of before tackling the harder questions in exams. To end off, instead of focusing on CPF locking up our funds for a long period, we can change the way we look at CPF. CPF top-up strategy to me is like the easier questions in an exam. Low risk, easy to execute, minimal effort or skill required. Treat it like a 20 to 30 years fund compounding at 4% every year regardless of how the stock market or economy is performing. I can't find any other investment products or strategy that comes close to it. And to ensure the portfolio is growing, you will also be topping up monthly through the mandatory salary contributions, similar to how we dollar cost average into an investment at fixed interval. I hope you find this video useful. Don't forget to click the like and subscribe button. Thanks for watching.